Good afternoon, and thank you for joining us for a Tax Practitioners Board webinar. My name's Anna Miliauskas, and I'll be hosting today's session. To begin, I'd like to share some housekeeping tips so you get the most out of the webinar. First of all, you'll notice a range of icons on the top of your screen. To ask a question, simply click the purple chat icon. Feel free to send through your questions and comments throughout the presentation, and we'll respond to you as we go. We value your opinion, and this is an opportunity to raise any questions you have with us directly. Just a note here that questions are visible to other attendees. So if you have a question that's private in nature, please contact us via our online inquiry form at tpb.gov.au/contact. If we're unable to answer your questions today, we'll respond to you out of session. If you're experiencing any technical difficulties, please call Redback Support on the number at the bottom of the screen. Following the webinar, we'll provide a copy of today's presentation and some helpful links. We'll send these to you via the email address that you used to register for today's session. I'd also like to remind you that today's webinar will count towards your CPE or CPD, and you can claim 1 hour for attending. However, we do not issue attendance certificates. Today, we'll be covering information around what a high-risk tax practitioner actually is, how we identify a high-risk tax practitioner, our focus areas, penalties and sanctions, case studies, and how to make a complaint. As I mentioned, we'll finish up by answering some of the questions we received during the webinar, so keep your questions coming throughout the presentation. Before we begin, I'd like to introduce our speaker for today, Michael O'Neill. Michael is the Secretary/Chief Executive Officer of the Tax Practitioners Board. He is a taxation lawyer with extensive public service experience. Michael joined the TPB in August 2018 from the Australian Taxation Office, where he was the Chief Risk Officer, following senior leadership positions in investigation, advice, litigation, and law reform. He also has experience in private practice and holds a Master of Laws from the University of Sydney. Welcome, Michael. I'll hand over to you now to begin the presentation.
And thank you, Anna, and it's good to be here. Good afternoon, everyone, and thank you for joining us today. Firstly, I'd like to say that this is a very generous contribution from yourselves, because we know that you're facing very difficult and uncertain times dealing with the pandemic. I want to assure each of you that we're committed to supporting the community, the economy, and importantly, working hard to support tax practitioners, because we know that tax practitioners are a vital part of Australia's tax and super system. And we recognise that many of you are working 18 hours a day, 7 days a week, just to support your clients through this difficult time. We understand you've got a lot of competing priorities. You're, like ourselves, you're probably waking up in the middle of the night and conscious of health and safety, that of your family, your employees. You're conscious of your clients and the contribution they're making to the community and the economy. So we're conscious that this can lead to not being able to meet some of your obligations with the TPB, and we're being as flexible as we can to support you. In particular, we've taken temporary measures to revise some of our policies to provide additional support to you at this time. So I strongly encourage any of you to, in these sort of difficult circumstances, to reach out to us, and if you have any challenge in meeting your obligations, because we're here to help. Just this week, we had somebody who was having difficulties with their registration, and they contacted us, and on the same day, we were able to resolve their problems. Today's webinar is one of many we've created to connect directly with you, and we value your opinion. Today, we'd like to provide you with an opportunity to raise any questions. Hopefully, we can answer your questions on the public forum or, as Anna said, privately. Delighted to say that joining me today is Christian Bueller, one of our investigation managers, and Fiona Street, one of our policy advisors. Christian and Fiona will be on hand to respond to any of your questions that get sent through during the webinar. And the purpose of the webinar is obviously to discuss what we see as tax practitioners with high-risk attributes and the action we're taking to deal with these sorts of cases. Finally, a little housekeeping point around your participation today can count towards your continuing professional education, and I'd ask that you keep a contemporaneous record of your CPE. Without anything more, I just want to get started. So before we get into some of the detail of the presentation, let me acknowledge that the vast majority of you, the vast majority of tax practitioners, are doing a great job. They're compliant with the tax law, with the Tax Agent Services Act, or the TASA as we call it. They comply with their professional obligations set out in the Code of Conduct. We know that over 10 million Australians, 75% of all taxpayers, use a practitioner and receive a great service, and that percentage is, of course, much higher for business. We also know that there's a small group of tax practitioners that don't comply, consciously so, and we classify this small group as the high-risk population. These are the ones we need to take firm action on to address their behaviours and to safeguard the integrity of the tax and super systems, and also protecting the community and the good reputation of the majority of tax practitioners. Many times in giving seminars or webinars or presentations, I'm approached in the break and asked why I'm not taking action against Joe Bloggs or someone like that, someone who's breaking the law, someone who's working as an unregistered advisor or an advisor who's registered but acting unlawfully and giving the profession a bad name. Maybe they're ripping off their clients as well as ripping off the community. And today, message loud and clear, if you can share that information with us, we will act on it. So what are we talking about when we say practitioners with high-risk behaviours? Sometimes these are people who are reckless in their work. They can be both unknowing accomplices to illegal behaviour or willfully blind to unlawful conduct. They can be the facilitator, the promoter, the implementer of a fraudulent scheme or aggressive tax planning. And they're dragging their clients into schemes which can involve evasion, avoidance, or other illegal attributes. We've seen things like tax agents producing false financials and lodging false tax returns. We've seen property spruiking by real estate professionals who may or may not be licensed real estate agents, and tax practitioners on the side selling the benefits of negative gearing in their SMSF portfolios. We've seen unregistered pre-insolvency or pre-liquidation advisors who are providing advice on avoiding tax liabilities through bankruptcy or liquidation, the sort of phoenix behaviours that the ATO is concerned about. And we're currently looking at employment law firms providing advice on JobKeeper provisions under the tax law and purporting to use other agents to provide supervision and control. We're very concerned about those sort of arrangements. Sometimes these false statements support financial fraud, seeking low-doc loans or credit card facilities on behalf of clients. Now, high risk can imply agents defrauding the ATO. They might also be defrauding their clients. And high-risk agents invariably have issues with the ATO themselves or with their related entities. Just like to go to how do we identify these high-risk practitioners. As I say, they're a small minority in the practitioner population, at least 80,000 strong. There are many ways we use to identify them, and one of those is through complaints received from yourselves or from the public, and sometimes it's from the media or public source information. For example, if there's a court case. Sometimes there's civil disputes in tribunals or courts. We use sophisticated data and analytics tools to detect high-risk behaviour, working closely with the ATO. And of course, we obtain referrals from other agencies. Just yesterday, I met with a couple of agencies. We share intelligence, we share operational detail, and we look at systemic risk. So some of the types of high-risk practitioners we consider, they could be registered practitioners that are lodging incompetent or incorrect or false returns. Others have a poor history of compliance with their own or related entity tax affairs. Some cases include allegations of fraudulent or criminal activities, including referrals impacting the black economy. As you know, the black economy is a significant economic issue impacting us all. It involves activity that happens in secret and generally outside the tax system. Sometimes we're looking at aggressive tax schemes, promoters of those sort of schemes, and people who persistently and deliberately are involved in non-compliance with their personal tax obligations. The other category for us is unregistered providers. Sometimes they're hard to identify as we can't use traditional analytical tools and software methods. But what has been very valuable for us is conversations with the registered taxpayer community. If, for example, there was a registered agent providing an excellent service in Burwood in Victoria, and they know down the road in the same suburb is somebody who's undermining the system and stealing clients, we're very pleased to hear from that good agent in Burwood about the unregistered behaviour. Some of these unregistered agents purport to represent the public, whilst really they're lining their own pockets. And sometimes we see them operating from offshore and possibly on behalf of criminal groups, and they might be involved really in identity theft. So we feel very, very strongly about taking action against these cases. So once we identify these practitioners, first we seek to understand what's going on and why. This might be called a case summary or for us a little profile. The profile comprises things like the size of the tax practice and their history, their target market, their experience, the supervision and control, associated entities, etc. The profile helps us to evaluate the risk an agent poses, and there we use the same risk model as the ATO, the intermediary engagement model that you've probably heard so much about. One example for us would be a practice which is very large, which has limited elements of supervision and control. That might raise for us risk indicators about financial vulnerabilities, how trust accounts are managed, etc. We might also look at lifestyle factors. Recently, we acted against an agent who was defrauding his clients. The backstory was a terrible difficulty associated with gambling. So the ATO's intermediary engagement model, many of you may have seen this as described as the teardrop model, developed by the ATO, adopted by the TPB, and it segregates practitioners into 4 broad categories based on observable behaviours. The 4 categories are evident in the slides. There's a great group of people involved in the best practices practitioners. There's behaviours of interest, behaviours of concern, and then the highest risk cases are those threat cases. The highest risk cases, both the threat and the concern areas, involve around 2,700 different tax practices with substantial leverage across the tax system because their client base exceeds 1 million taxpayers. Increasingly, our interactions at the TPB are coordinated with the ATO and sometimes with other agencies as well. For example, the ATO might review a practitioner's affairs and their clients and might see a pattern of fictitious claims, including overclaimed work-related expenses, manufactured losses from rentals or from business activity. Concurrently, at the TPB, we'll examine compliance with the Tax Agent Services Act, the code, or other laws. The collaboration brings about a a timely resolution and supports practitioners who are acting with integrity, the level playing field, and protects clients. For example, we have real-time intelligence sharing with the ATO about high-risk practitioners linked to the stimulus measures. This includes agents whose clients are linked to fictitious or overclaims regarding the cash flow boost, JobKeeper, and superannuation early access. You probably know that there's been over, I think, 1.3 million claims under super early access, and we're looking with the ATO very closely at patterns associated with high-risk practitioners. These are not cases where practitioners have exercised reasonable care. We've previously spoken about that, and practitioners have asked questions about the difficulty in working out projections where practitioners exercise reasonable care in working out their projections, and they still come up with an error. The ATO and the TPB have said there are no concerns. These are not those sort of cases. These are cases where there's fraud associated with the stimulus, and these are cases where the TPB, the ATO, and the police will all take swift action. Some of you may have seen in yesterday's press some commentary about the headline was JobKeeper is being gamed, but the ATO is on the case. Certainly agree with that, and I want you to know too that the TPB is there as well. I want to talk a little bit about our complaints process, because we receive in the vicinity of 1,500 complaints a year. Mostly they come in online, and they come in from taxpayers who might be dissatisfied with the level of service they've received from a practitioner. They might come in from fellow tax practitioners who are bringing a problem behaviour to our attention. Sometimes they're anonymous dob-ins for matters which might relate to fitness or propriety, advising us, for example, of criminal behaviour. And we also receive a large number of referrals about unregistered activity that we will investigate. All complaints we receive are reviewed and risk assessed. We seek to resolve issues between clients and practitioners wherever possible. This might involve a case where there's some miscommunication between the parties about the timing or the size of a refund. Early resolution of minor issues is obviously better for all parties, and we seek to do that in the vast majority of those cases. We try to understand the complaint in the profile or the context of the practitioner and consider whether further inquiries are appropriate. And where there is indicated from the complaint high risk, then we will follow up. We'll obviously be contacting the parties for further information, and sometimes we'll need to gather evidence or information from third parties to understand or substantiate an allegation. So let's talk a little about the investigation process, what actually and practically happens. Where we're concerned with a breach of the law or the code, we'll articulate those to the practitioner in the form of a please explain letter. We seek to review the behaviour and the evidence and the response in the context of the law, and we'll work with the practitioner to clarify any further information, and we're not prejudging the circumstances. So last year, about 70% of the complaints that were lodged with us were resolved at the very earliest stages, generally between the practitioner and the complainant, with the TPB offering just a little bit of support and nudge, some introduction and some facilitation. They're good results for all of us. But sometimes we will need to initiate further inquiries if we see high risk. Those decisions are made by people like Christian and our other excellent investigation managers who have commercial experience and a lot of investigation experience with the ATO, the TPB or other agencies. If a formal investigation is commenced, notification is provided to the practitioner. Of course, our investigations aren't always based on a complaint. Sometimes it's intelligence from our analytics program or other co-regulators as a starting point. You might know that a year or so ago, we used analytics as the basis for considering those practitioners who had outstanding personal tax obligations, debt and lodgement issues with the ATO. We'll cover off some of those when we look at some case studies later this afternoon. We'll conduct inquiries so that any intelligence suspicion is authenticated and we can understand the whole picture, including any circumstances which mitigate against misconduct. Sometimes matters are resolved informally or by preliminary inquiries, and other times a formal investigation is required, and then we might use our evidence gathering powers. In all of these cases, we seek collaboration and assistance from the practitioner involved. There are a number of provisions within the law which are then enlivened if a formal investigation is started. And importantly, there's a 6-month time limit established for the investigation by the board to be completed. In limited circumstances, that 6-month time limit can be extended. And in the current circumstances, we've written to about 70 tax agents, tax practitioners, and said to them that we understand the complex circumstances they're in and offered to extend if that would be useful for them. Our investigation process obviously includes the gathering of evidence from the parties and any third party, and then we try to pull together to articulate the case in the form of a submission or case summary. In every case, the practitioner is asked to comment on our case summary, on our submission. Have we got anything wrong? Is there any other material fact that needs to be put to us so that we can understand? And the very important thing for practitioners is that that updated submission is presented to the independent board of the TPB, comprising current or former tax practitioners or people with extensive commercial or tax law experience. And the board's conduct committee will make a decision with 2 parts. First, whether there has been a breach of the TASA, and second, whether there's any sanction that should be applied in the circumstances. Following the investigation, of course, the practitioner will be informed of the outcome, details of the breaches and any sanctions. And for transparency, it's very important that we publish decisions both on our register and the Australian Government Gazette. We'll also advise the relevant recognised professional association and engage with co-regulators like the ATO. We'll need to advise relevant clients, as sometimes they need to review their own circumstances and perhaps seek independent advice or a new advisor. And of course, practitioners in any of these circumstances have appeal rights to the Administrative Appeals Tribunal, the AAT, or to the Federal Court. You might be interested to know that currently we have over 500 investigations with 50 cases on appeal, and most of those are before the Administrative Appeals Tribunal. Just want to talk about a key factor for us, which is the vulnerability of clients in the community. As you know, one of the missions of the TPB set out in the TASA is protecting the public. So a key consideration of our enforcement activity is the vulnerability of the tax practitioner's client base or the community at large if misconduct was to continue. This might include the tax practitioner's promotion of a tax avoidance or evasion scheme. And we're very sensitive to the vulnerability of future occurrence. We also determine that there might be, that the higher the harm, the more prevalent it might be, the higher the risk. A vulnerable client base might, for example, involve a section of the community with limited awareness of the tax system. That sort of community that might be easily led into fabricating claims for rental deductions when none are permissible. Another key risk is where an agent is designing a scheme that might be mass marketed or sold, say, to all their high wealth clients. Can I take you now to some focus areas for the TPB, some focus areas of our investigations? In this challenging environment, you know that we've got a commitment to working with the ATO and practitioners and associations to deliver the stimulus measures effectively and fairly. We're all enormously relieved that we've passed perhaps the first stage, the critical health stage. We're all a little nervous around the possibility that health issues might pop up again, but relative to the world, we're enormously lucky. There's much work to do for all of us around supporting the community and the economy. And you, the vast majority of agents, have done an extraordinary job supporting businesses to manage cash flow and to retain employees. As I mentioned earlier, in this challenging time, we're going to try and help you to support your clients. And one of the ways we're going to help you is to act swiftly and take firm action on any attempts to defraud the system. That's what the community, that's what the government expects of us at this time. You might have seen recent Senate committee evidence from the ATO and the AFP flagging some malicious attacks on the stimulus measures. And I'm very pleased that there's been a very swift and effective response. So some of the issues that we're focusing on at the moment regarding practitioners are those who are willfully taking advantage of the stimulus measures. They're undertaking illegal or illicit activities in the black economy, facilitating willful or systemic disregard of the tax laws, sometimes obstructing the ATO's investigations, or manufactured and wide-scale overclaims of work-related expenses and superannuation claims. Some tax agents are using their position to access information to undertake other criminal activities, and that might include use of data, confidential and private data, for identity fraud purposes. One of the things we're also concerned about is this focus on SMSF auditor numbers. We call them SANs for short. Last year, the ATO began a proactive approach to ensure that SMSFs have integrity. As you know, there's a huge bundle of assets in self-managed super funds, and SAN misuse was tested across the 2017 financial year. The ATO discovered that there was 1,000 superannuation funds misreporting the SAN inadvertently due to things like software problems. There were another and more concerning 154 super funds deliberately misreporting the auditor's SAN, and 74 tax practitioners representing 106 funds who lodged annual returns for 2017 for their SMSF and with incorrect SANs, and when challenged by the ATO, they've failed to provide a reason. Now, the ATO and the TPB fully expect that practitioners who are doing the right thing are going to cooperate with their inquiries or our inquiries. Therefore, we're targeting those 74 practitioners for their failure to engage with the ATO properly. If you're a registered practitioner and you've lodged SMSF annual returns, it's important that you comply with requests to provide further information. If you've lodged an SMSF annual return with an incorrect SAN, then there could be a breach of the code if you've failed to exercise reasonable care. There might be a breach if you fail to properly advise your clients about their SMSF obligations, including the obligation to be audited prior to the lodgement of the annual return with the ATO. More particularly, looking at the COVID stimulus packages, some of the things we've seen associated with high-risk agents are the creation of entities and stolen credentials of individuals to support fraudulent stimulus payments. We've seen the backdating of employment arrangements, amending business activity statements to support larger and contrived JobKeeper payments. We've seen artificial and blatant attempts at manufacturing business turnover. These are not mere miscalculations. We've seen the delaying of invoices to customers to make it look like the business has suffered the requisite decrease in revenue, 30% decrease in turnover for those businesses of less than $1 billion turnover annually. And we've seen the forward dating of asset purchases in order to enable instant asset write-offs or restructuring businesses to enable accelerating depreciation. We've seen claims about reducing taxable income to allow the taxpayer's partner to satisfy partner income tests, and we've seen facilitation of false hardship applications to assist taxpayers obtaining early access to their superannuation. And finally, as I mentioned before, those pre-insolvency arrangements, all about defrauding the creditors, including some Phoenix schemes designed to defeat a tax debt. Where we see those sort of behaviours, we will act. And where you see those sort of behaviours, we ask that you speak up and tell us about it. The next part of this presentation just looks at the outcomes of our investigation if a sanction is found. There are a number of administrative or civil penalty provisions in the law applicable to agents, and the law also provides for court-imposed penalties on unregistered agents. If the Independent Conduct Committee of the board find that a practitioner has failed to comply with the TASA, they can apply one or more of these sanctions. They can look at cautions. They can require the agent to do certain things, orders, if you like. One of those things might be a course of education to ensure that they're properly and professionally equipped to serve their clients. Orders might also look at providing services under the supervision of another tax practitioner so that clients can be properly represented. Sometimes the Board Conduct Committee will order a suspension or even a termination of registration. And where there's a termination, there could be an exclusion period imposed of up to 5 years. The severity of the sanction, of course, depends on all the facts and circumstances of the case. And the practitioner might also have a view on what sort of sanction might apply if the Board Conduct Committee finds there is a breach of the law. The other safeguard built into the system is that practitioners have a right of review with the Administrative Appeals Tribunal as an independent umpire. The AAT, as you know, stands in the shoes of the TPB and can review all the facts and the circumstances. There are 50 such matters before the AAT at present. The board can also apply to the federal court to seek a penalty for breaches of the TASA. Individuals can receive a penalty of up to $52,500 for each breach, and bodies corporate can receive a penalty of up to $262,500 for each breach. Sometimes the board refers the practitioner conduct to the ATO or other law enforcement agencies because of our investigation uncovering criminal activity. We are aware of some criminal investigations and some prosecutions of tax agents that are ongoing at the moment. So what happens in those cases? where registration is terminated. The practitioners, what will happen to the practitioner goes through a sequence of steps. There's public notification, as I mentioned before, in the Government Gazette, and the board's findings will be published on our public register. We think that's important so that there's transparency about the work of the board. It sends a message about community confidence. And in the words of the AAT, there's a general deterrence associated with publication of breaches and sanctions. We send notification to the relevant registered professional association and ATO or ASIC as appropriate. And we also work with the ATO on strategies around the termination to treat the risks. And that might involve removing the practitioner's electronic access to the online services from the ATO, the portal, in other words. It might be engaging with the client base of that former practitioner to advise them of issues, to recommend independent review of their tax affairs, and to make voluntary disclosures if that's required. To put some flesh on these bones and perhaps to illustrate in a bit more detail, we've just prepared some anonymized case studies based on some real matters that have come before the board. The first case study is about a tax agent that underreported their income by $900,000. There was an audit of the ATO's affairs in the 2017-2018 years. When the audit started, the agent did a good thing and made a voluntary disclosure, said that there'd been an omission of $350,000 of income. But the ATO proceeded with its investigation and found that the understated income exceeded $930,000. So the problems were compounded, not just the false statement in the initial returns, but the false statements in the voluntary disclosure. These were matters that affected the agent's good fame, integrity, character, and these are things that the agent should have declared to the TPB in its annual declaration. You might know that we've suspended annual declarations until the end of this calendar year in order to clear the decks and some of the compliance issues for you as agents. But we encourage people to be honest and transparent in their dealings with both the ATO and the TPB. The Conduct Committee, in turn, found a breach of the law, a breach of the code. Code 1 for failing to act honestly and with integrity when lodging that annual declaration. Code 2 for failing to comply with the tax laws in their personal affairs. And Code 3 for knowingly obstructing the administration of the tax laws. That false voluntary disclosure was a compounding problem. The ATO found that the agent was no longer a fit and proper person to be registered, terminated the registration, and imposed a 3-year exclusion period or ban, preventing them from reapplying for registration. The next case involves reckless behaviour and, again, disregard for the tax laws. This involved the ATO conducting 48 audits of clients of a company tax agent practice. These were not isolated, but spanned 2015, 2016, 2017, several years of misconduct. The audits showed a pattern of work-related expense overclaims. They couldn't be substantiated, or we couldn't show relevance to the derivation of income, the running of a business. The work-related expense overclaims and rental deduction overclaims led to a shortfall of over $300,000. And the ATO also audited one of the agent's associated entities and disallowed unsubstantiated research and development claims and imposed heavy administrative penalties. The ATO had previously audited this practitioner, looked at the 2009-2014 years, And again, in those years, there was significant shortfalls and penalties. And the hope would be that where the ATO picks up those sort of issues in the past, the behaviours would change by the practitioner. But this wasn't true in this case. The company and the tax agent both had failed in their personal tax obligations, failing to lodge activity statements, a failure to lodge 13 income tax returns for associated entities, 11 quarterly BAS statements for associated entity were also outstanding. So the agent was found to have failed to cause those associated entities to pay substantial outstanding tax debts exceeding $250,000, and there was no payment plan in place with the ATO. The Board Conduct Committee was very concerned about this sort of behaviour, and the company tax agent practice was found to have shown reckless behaviour, disregard for the tax laws, failure to take reasonable care, and showed a lack of honesty and integrity. The board terminated both the individual and the company registrations and imposed the maximum 5-year ban on both the individual and the company from seeking re-registration with the TPB. The third case study is interesting because it involves a tax agent who assisted clients in setting up labour hire entities with straw directors, the classic sort of Phoenix behaviour. These behaviours included lodging BAS and claiming input tax credits where there was a failure to remit the GST. There was a failure to remit the PAYG amounts and super guarantee. There was, while they were acting as a tax agent, and an ASIC agent and a payroll service provider, they were facilitating underpayment of sponsored migrant visa arrangements. So again, we refer to that vulnerable class of clients. During the inquiries, the tax agent entered into voluntary liquidation, signifying Phoenix type of behaviour, and the principals of the company tried to lodge new applications with the TPB so that they could be re-registered in a new corporate guise. The Board Conduct Committee terminated the registrations of this agent and all the other agents involved and prohibited them from applying for 5 years. This is a clear case where the board is acting to protect the reputation of the profession and the public interest. Just one last case study. This one involved in serious misconduct, and this one has just recently come before the Conduct Committee. There may be ongoing litigation, so there's not too much detail I can share at this moment. But during our investigations, it was discovered that the tax agent had a personal income tax debt of $5 million, and over $500,000 of that was associated with general interest charges. So it was a debt that was well overdue. The agent had no formal payment plan with the ATO, but made false declarations to us that he was on an agreed payment arrangement with them. The agent had lodged late personal tax returns and late activity statements for a related entity and was a party to arrangements with an offshore entity that had large undisclosed profits from the sale of a related business. In other words, a suspicion of offshore tax evasion. We think that that practitioner intentionally made false statements to the ATO during the ATO's investigations that spanned the 2011 to 2016 years, where there was an understatement of income or capital gains. The Board Conduct Committee was very concerned about the failure to act honestly and with integrity, the failure to comply with tax laws in regard to the practitioner's own affairs, and again in obstructing the proper administration of the tax laws. It was only at the end of our investigation that the the tax agent first made a claim in mitigation about the impact on his personal health. There was an attempt to surrender his registration with the board. However, that claim about poor health was not backed up by any evidence, and the board didn't accept the surrender because the investigation was well advanced, and the conduct committee decided to terminate the registration and impose the maximum 5-year ban. The BCC, the Board Conduct Committee, found the agent had failed to comply with the code, no longer meeting the requirements of being a fit and proper person, and those requirements of being a person of good fame, integrity, and character. Those sort of cases are very important to us because practitioners' own affairs are really an indicator of a risk more generally. And where we see those practitioners with outstanding debt enlodgements, where practitioners are involved in tax avoidance or evasion arrangements, where they are mirroring those arrangements for their clients, we are very, very concerned. Let me take us to the point about making a complaint to the TPB. This is a way that you can help us to maintain the integrity of the tax and super system by letting us know if you see people who are not doing the right thing. One of the scenarios that was put to us recently regarding a stimulus package was of a conversation between a tax agent and a BAS agent, where one of them was saying to the clients, X, Y, and Z is all perfectly acceptable under the stimulus arrangements. You really want to maximize your return. And the other provided a check or balance on the exuberance, or some would say the illegality of the first advice. Where you see those sort of arrangements, we'd ask you to report them to us, completing a simple online form, and you can email us on COVID-19 tip-off at the TPB, or call us on our free line 1300 362 829, 1300 362 829. All of those tip-offs are treated in the strictest confidence. And as I mentioned before, on a weekly basis, we're connecting with the ATO to share vital intelligence. So to finish our webinar today, just an opportunity to address some of the questions that might have come up during the course of the day. And so, Christian, can I hand over to you, please?
Thank you, Michael. Yes, we received a number of different questions through the course of the chat box here, and I have to thank everybody for their involvement and interest, and hopefully I've been able to answer the majority of some of those questions. I thought there was one that may interest you and might be something that you could comment. What would the Tax Practitioners Board be able to do to inform clients of the deregistration of a high-risk practitioner?
Yeah, thanks for that question. I think the process that we undertake is either the TPB or the ATO, sometimes in coordination, will advise the clients of the sanction imposed by the TPB. That sort of advice gives the client, the taxpayer, the opportunity to review their own affairs, to seek independent advice if required, to make voluntary disclosures, and to enter into reasonable debt repayment arrangements with the ATO. So there's some very personal and directed engagement with clients. And of course, there's the public messaging through the Government Gazette and through the TPB register. So we continue to encourage taxpayers who choose a tax agent to check the bona fides of the agent to ensure that they're registered on our register. Thanks, Christian.
Just further to that question, it's often observed that complainants only receive basic information about the outcome of an investigation. Why can't the TPB provide more information about the outcome?
Yeah, that's a difficult one sometimes, because we provide to the complainant all the information that legally we're able to. The secrecy provisions of the Tax Agent Services Act and the restraints of the Privacy Act mean that sometimes there's information which we won't be able to share with the complainant. In the case of a complaint, the complainant is obviously a third party to the matters which are resolved between the TPB and the practitioner. So there are some circumstances where the TPB can't disclose the full picture. The good news is that the vast majority of complaints are resolved at a very early stage by bringing the parties together. And so where there's resolution, the complainant has full transparency of the matter. And of course, as I mentioned before, if a sanction has been imposed, then we will continue to make that public by informing the relevant professional association and updating our register, sometimes by issuing a media release as well. Thanks, Christian.
Now, if someone wanted to make a complaint about another tax practitioner, but they're worried about them finding out, what options do they have?
Yeah, the options include making a complaint anonymously. There's another option about making a named complaint, saying I'm Michael O'Neill and I'm making a complaint, but I don't want you to disclose my identity any further. And of course, there are now whistleblower opportunities for practitioners to make complaints that provide additional statutory protections. So a whole range of ways in which people can keep their anonymity and still make a complaint.
How do we work with the ATO on compliance cases and yet retain that independence of the TPB?
Yeah, as you know, this is an issue that has come up in the context of the review of the TPB that was conducted by Keith James. People saw that the TPB and the ATO are working more closely than ever and raised the question of independence. We think that that's a question more of perception than reality. The key safeguard for practitioners is that the TPB is in decisions, in strategy, and in sanctions governed by this independent board. We have 8 board members, current or former practitioners, lawyers, people with experience in commerce, and they're the people who are the drivers of the strategies and of the sanction decisions of the TPB. So whilst we do have a high degree of cooperation with the ATO, the independence of the TPB is well assured. It's also something that might be addressed when government looks at the reforms proposed by Keith James as part of his review of the TPB. Thanks, Christian.
We might throw back to you now, Michael, just to wrap it up, just because of time, if that's okay. We'll just go to the stay in touch slide.
Thank you very much. Can I say thank you for joining us today. If you'd like some more information, can you visit our website at tpb.gov.au. You can follow us on social media, LinkedIn, Facebook, Twitter. Please subscribe to our YouTube channel. You can receive notifications of any new videos or presentations that we present. We've also got a newsletter that you might find informative, and you can subscribe to that on our website if you go to newsroom. You'll see that. I want to remind you, if you can keep us all updated and any changes to your contact details, obviously a requirement of our code, but also so that we can keep you apprised of any new developments. Easily update your contact details via the My Profile page on our website. Again, thanks for joining us. Please stay safe, and on behalf of the TPB, thank you for the excellent work that you're doing for your clients and for the community, especially at this challenging time. Anna, can I pass to you, please?
Thanks, Michael. Thank you for providing us with all that useful information, and thank you again to Christian and Fiona for answering questions through the chat box today. Thank you also to everyone for joining us. We hope you found this webinar beneficial. It's a great way for you to keep up to date, and as we've said, it can count towards your CPE. Remember though, we don't issue attendance certificates. If you're interested in attending more of our webinars, go to tpb.gov.au/webinars. We have another webinar on today at 2 p.m. Australian Eastern Standard Time about your client's obligations to you as a tax practitioner, which we hope you can attend as well. Before we finish up, I'll be launching an exit survey. We'd appreciate if you could take the time to complete this survey. It only takes a moment, and your feedback will help us to improve the webinars and lets us know of any topics that are of interest to you. The survey will open in your browser once you leave today. Once again, thank you for joining us, and we hope you enjoy the rest of your day.